Investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman here on this Wednesday, the 15th, and overnight what we had was a Russian attack on a military, on an American drone. We had Credit Suisse plunging, and now the Dow is down 470 at 31,690. The S&P is down, so it's made a new low from the last couple of days. The S&P has not. It's holding a little bit better. It's down 54 at 38.66. The QQQ holding pretty well when you think about it. Down $1.95 at 295.40. The IWM, so that was the index 100. The Russell 2000, very close to the low of 3 days ago, down 4 at 172.50. Gold, wow. Gold is up big. It's up 16 at 1926. It's just had a very big move from a week ago when it was down in the low 1800s. The high today is 1935. Silver, so silver was lagging. Then it had a huge candle 2 days ago, and now it had a big spike to the upside with that 200-period moving average at 29, where it is right now, 29.09. That's contained the price. I didn't look at Bitcoin earlier on, so let's look at it now. Huge single leg A up. Was that an A, or could that be an E? Oh, that could be an E/A. No, I'm going to call it an A. And that's a D in the weekly chart. So we were looking at the Bitcoin down 50 at 25,190 yesterday. Unbelievable. It actually had gone from the 19,000 level just 4 days ago to 26,615 yesterday. This is part of the bank crisis. Just look at the XLF. The XLF, the financials, made a new low. It's trading down 89 cents at 31.39. This is going to be very difficult for the Fed, because if you're looking at crude oil, and crude oil, in a sense, is telling us about international, the economies around the world, the demand for oil. Well, it's not there. We just made a lower low. This is a multi-year low. Last time we were here is not a multi-year, but a year. The last time we were here is February a year ago. Yeah, 72.79 was the low, and here we are at 68.79. So this is telling us a lot. Let's go to high-grade copper. High-grade copper. I mean, we've been seeing so many divergences. High-grade copper made a lower low below the 200-period moving average. And that's just saying, be careful. Let's look at, let's do this. Right now, I'm going to go to the chart that I show my subscribers every weekend when I do my hour-long overview video to look at what's happened, what I'm anticipating, what we're looking at, what stocks might be very interesting, etc. I show this, here's the triple yield chart. So you had this huge, right there. I'll squeeze it a little bit. Can I squeeze? Wrong one. Squeeze this one. Yeah, look at this. So you've got a cup and a handle. I don't like that pattern because it always says, unless you get it perfectly right and you get the bottom of the cup, which is kind of what Investor Business Daily, that's been their mantra for years. That's what they trade. Then you've got a good cushion. But if you get it as it breaks out, like a head and shoulders, this is already too late because it pops up and it comes right back in. So you can see the cyan, most of the colors here are the cyan, which is the 5-year. The 5 years leading the 10-year. The 10 years leading the 30-year. It's unbelievable. Anyway, so now we've pulled back, and now yields are pulling back within this failure of a cup formation. And I suspect that this is what the Fed is going to have to look at. You're looking at the right side where would the iShares Global Timber and Forestry ETF, made this bounce with a peak E, and now it's under the 200-period moving average. It's almost like copper. It's an international copper and crude oil. It's an international look at markets and how they're reacting and the economies around the world. Pulling back, did have a beautiful rally, having gone from 61 to about the almost 8, to the 80 level. Now it's down at 70 or 69. And look at this. This is the Philadelphia Housing Index. This is holding pretty darn well when you think about it, but it is pulling back. So within that context, let's just go back to the markets and say, I want you to finish up by saying, yeah, we are looking at bonds. We just saw the inverse. So the bonds are trading at 132 and 17/30 seconds on the continuous contract. If you look at the TLT, and I made a big deal about the double tops and double bottoms for a long time now, because we saw the 99s was the level of support in the Lehman iShares 20-year Treasury bond ETF. Then it pops up where to the 200-period moving average right at 108.95. But that was the almost like a triple top going into January's highs. And now we're going to see what happens. Will yields push down as the bonds rally? And that's going to be a very big issue. So I wanted to finish up with that. Go to the VIX index. Now I keep hearing boop, boop, and I'm not sure whether that is whether that's me being taken out by the internet. We'll see. But what I am going to look at right here is I got a couple of quite a lot of questions I want to go to. I just want to see something here to see if everything's working. Yes. So now look at this. Within the context of the volatility index, with all this really bad news, we haven't gone above yet. We haven't gone above the 30.81 high of 3 days ago, and yet the Dow made a new low, but the S&P hasn't yet. So this is going to be very, very important. Here's the Chapman wave inside track repellent zone, this declining mini channel right here. Look, price is not being able to close above it. When it does, this market goes even low. But until then, we could chop around. Now, I need to get to this right away. There are questions I want to get to, but I need to show you this. So for my subscribers on Saturday, I spent quite some time on this chart here. And what is this chart? This is a chart that I call Chapman Wave Dark News Cloud Cover using the daily Dow. And here we are. Every time we've had these big rectangles at the top where we get an internal high and then a retest of that high, like an earthquake and the aftershock at the top. And then I'll make a big deal of the ones at the bottom because it happens so often, internal low and residual low. I said this is the first time that we're going sideways in a rectangle. When a large rectangle extends to the point where it becomes a narrow, long rectangle, you've got to be careful because now, I don't know if I want to do that. I'll do it now. Yeah, I don't really want to draw extra lines on this chart, but here's the midpoint of this rectangle, right from there to there. It's just a tad too high, a fraction. So this says to me that if there's a price that goes to the top and then breaks this midpoint support line, it should test the bottom. And then if it rallies back and tests that trend line, midpoint trend line of the rectangle, and then fails, it can go way under it. It's such an important moment. I'll be back because I want to take a little time to talk about it. Basil, Chapter, Tiger, Ignition Tower. We're looking at the Dow down 93. I made an arch formation, retested the lows, and now it's just stuck in the middle of the range. You'll see on the right here, there's the chart with this big, thick blue line. Remember, this is the blue line that I said. This is a narrow. I don't even know if I've got it. If I can go back far enough right now. I said this is the narrow rectangle. We took out the support. There it is. Right there. We took out the support, went below, and then we broke to the upside. That was that period from 2 o'clock on a couple of days ago, going into the 14th, that was yesterday, to the breakout at about 6 in the morning, and then we rallied up. So I had a peak C, but I actually was doing an alternate count which said, oh, you got to be careful there because I had a peak. I think it was a peak F in the 1 minute chart, peak D, alternate count, not a C, but it was a C, maybe a D, and it turned out to be a D because it went below the 200 period moving average, bounced up, had a kind of a two-thirds rally up to a peak D at about 39.60, and then just took a dive into this morning. So now this is the blue line. That you remember I said that decades ago I used to hand chart at the top of the Nike. Got it? I remember saying, oh, this should be the top. What was it? 29,000, whatever it was. And then the 1987 crash, a bunch of things like that. But most importantly, I found that trend lines, if you continue them, eventually they come back again. So right at this particular moment, we're looking at this blue line becoming important once again. All right, you could talk about a Fibonacci number. It doesn't matter. Right now, this is the line that I'm looking at, and that's the line that's at about 30, let's call it 3,900, 39 to 39.03. If we can get above that, that's really important. All right, let's get back to this chart right here. So another question is, what are you doing? Well, we've raised a lot of cash. We're in a... we keep having these trades just on using minimum amount of money, using a 3 times long position. We've been buying on these pullbacks, we've been buying the UDOW. We're in it again today. We had nice intraday profits yesterday. Now we're going to try to do that again today with a chance that we get becoming so oversold that there should be a better rally in time. Not so much necessarily in price, we don't know. But look at this trend line going all the way from the high of the 5th of January. That was when the Dow was at 37,000, just under 37,000. Look what happens. It comes back and it keeps hitting this line. It can't break above it. And then finally in November, it pierces it, comes back to retest in December, goes sideways. So the dark news cloud cover, meaning that there's enough bad news out there that the market either ignores it, which is very bullish, takes it into consideration, which says you can stall, or says, oh, this is terrible news, and starts to plunge. And here we are. So now I think we're in the process of yet trying to make an internal low. Now, what I discussed with my subscribers to my opening call over the weekend was, and I've been talking about this for some time, is that the October low in the 28,000s in the Dow, it seems to me that every time the market rallies very strongly into about the Dow, into about the 34,000s, there is something that happens in the economy and geopolitically, whatever it is, to really shake up the market. And yet, look what it would take if this is the news and the Dow is only at 31,700 right now. What would it take to get down to the 28,000s? So that's only 3,000 points. That can happen very quickly, but my anticipation is that over the 6-month period starting from this past November, going into March, this is going to be a critical month, March, we should see enough debilitating stories and data to really to really shake up the market. But these are little mines. There's no such thing as a little mine, but these are mines, so that you get these little mini explosions. But the big internal low and residual low that was made back in October, that holds. I don't know if I'm going to be correct, but that says to me we've spent a year and a quarter, or a year and a couple of months, in this huge bear market, and yet we haven't really broken down. Breaking down means that we'd go under 27,000. That can happen. I'm not saying it can't. I'm just saying, isn't it fascinating that every time we're in this crisis mode, something comes along to not necessarily save the day. Well, I should say save the day, but it doesn't save the week or the month, but it saves the day. All right, got that out the way. You can see how important this trend line is right here. Should the Dow take out 31,000 in the next week, that is something that's serious enough for me to say, okay, maybe that thesis is out the window. But that is the thesis that I have. And look, you can see it in the volatility index, up 3.41 at 27.14. But so far, it hasn't spiraled high. Now, the gold high, the gold rallying like this, whenever I've noticed, I went to the wrong thing. Whenever I've noticed over the decades that there's some kind of a financial crisis, gold is the participant you want to be following, because that's where internationally you see not just banks and big investors, you see countries put money to work. So that's really important. That's a kind of a hedge against some kind of a crash in the whole financial system. Okay, now let's do a couple of other things. I wanted to talk about, Jason wanted to know a couple of days ago, and then I forgot to do it yesterday, about AKCC. AKCC. Why am I not getting it? Is it AKCC? Hello? Oh, no. AKCC. I had it just a moment ago. Oh, AR. If you write your K like an R, there it is. So this is Ares Capital Core. So they're involved in the financial aspect a little differently to most of the financials. But the question was, what do I think of it technically? And all I can say is that I think the risk is there because the move that we've seen on the way down from the 200-period moving average of 19.22 ARCCs, the symbol is down 14 cents at 1770, suggests that the low that was made 3 days ago has to have about another, I would say, 3 sessions. I probably want to make it even the entire rest of the week going into Tuesday to attempt to get to 18.33, the pink 9-period moving average. If it's able to break even in the next 2 days above 17, I'd say 1793, that's a good sign. Over 18.10, that's much better, but it's tough. I'd be better.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Everyone, we're back, and the Dow's down, the S&P's down, E-minis down 60 at 38.89. You can see how important that resistance is at that 3,900 level. We're going to be watching this very close. This is I would say it isn't just an important session for the chart patterns we're looking at. It's a very important session emotionally, psychologically, technically, and in fact for the Fed. Really important. Okay. What we're looking at is this ARCC. So I would recommend, if you're treating it as a trade, now I don't think that's Jason's question because he looked at this as well as the owner of this particular company, which is OCSL. There you go, OCSL. That's Oak Tree Specialty Lending Corp. So the way I understood it is that in their lending process, they have a niche, and it's a little bit superior, but I'm afraid. I don't know why one would be in the financials right at this particular moment, in the sense that you're looking for a more intermediate term play. If you're looking for a short-term trade, then I would go back to ARCC and I'll look at it and I say, yeah, it's holding a little bit better at 1775. If you want, this is not the reason for buying it, so you don't really want to buy it saying, oh, I'm going to put in a 70-cent stop, a 3% stop or something. Why? Because you got so much to look at for it to really show growth, that is upside growth. And for it to do that, you really would have to trade in the 1830s for a couple of days and then try for the 1834. If it does that, you've got at least a decent cushion. So that's the only way I would do it. I say I'd enter here, because it's a very big unknown. And look at the big chart. Look at this arch formation in the weekly chart. Look at the dreaded H potential in the monthly chart. So you'd have to be really convinced that this is where you want to go and that you're prepared to get in. But you might have to try 2, even 3 times. But if you do that, you're going to have to make a lot of percentage to make that up. I'd prefer to have more confidence in it. So let's look at it again, maybe tomorrow or the next day. And if you want to you can nibble here. It's a much better way to do it. Just nibble a couple of shares and you got it at 1776 and you got a much better sense of what can happen. And then you can add to it if it starts to build. But at this particular point, one day does not make it a trend. So the next question we have is, where did it go? Oh, did I write it down? TUA, I think this is a 2-year. So this is the TUA is that's all it says, TUA. But Coda said it was a 2-year. Let me just check to see what the question was. Here we are. 2-year Treasury or TUA. Okay, so it's so difficult. Well, first of all, this is like an IPO, so there's no history. But it is so difficult when you get these sudden moves to say this is the start of a huge trend to the upside, because this is 2 things. One is it's an emotional play, and number 2, it's a technical play because it's doubled from the 2487 200-period moving average resistance. And on the price, it's gone from 23 to 24.87, and now it's trading with a high of 26.19. So that just says, on a very short-term basis, TY2. I don't remember how I got the 2-year. TY2, is that at? Let me see if I can do this. TY2. I don't think that's right. No, that's not right. So, all right, I can only do it. So TUA, but you had another one. You had a TYA. TYA, is that a 30-year? Where am I typing? There. TYA. Yeah, it's the same thing, except they got a little bit more history on this one. So, wow. You know, 2-year treasury, 3-time leverage. Can you please do the 2-year treasury yields or bonds? TYA is the 10-year, 2 times that. TYA. Okay. So let me just do this. I'm going to go to the dollar FVC.X. Is that correct? Oh, I took it off, didn't I? Yeah, no, it didn't. So that is the FVX. Okay, I've got it. I've got the 5-year. Maybe that. Can I do the 5-year just for the moment? Dollar FVX.X. Yeah. So the dollar. So the 5-year Treasury bond, Treasury note, is down sharply at 34.48. So that essentially is the yield, and you're playing the inverse of that. Okay, all right. Now I get the picture. So I didn't want to take too much time figuring it out, but I have figured it out. TUA. So now what I can do is this. I can say, I was typing on the chart. There it is. Get rid of it. Okay. Text remove. So yes, I like this on a rocket ship pretext, but I would only do this. So you are long. What I would do is, I suspect it's going to stall at a certain point as the Fed is starting to make decisions, but I like the action. And all I can say is that at 26.22, up 4.5% on a yield, on the actual, this is on the Treasury. This is a 2-year. So I'm just looking at this. This is not the yield, this is the actual core. I'm looking at this and saying, I can see support on the short term, but because it's an emotional move, it can also be an emotional move to the downside. But 25.33 to 24.87, the 200-period moving average, that's your core support. My suspicion is if there's just a minor pullback tomorrow, Friday could see another big spike to the upside, and that's where you got to raise your stop. But in a longer term, I wouldn't be surprised if the low that was made at 23, if that holds very well, and even the 24 level, 24.20 holds, just based on everything I'm looking at, especially based on, if I look at the TBT, and that is the yields. So I'm basing it now on the trend of the yields themselves as overall trends. This is the Lehman 20-year Treasury bond ETF. This is, of course, the 20 or 30, even more longer yield. Look at that island reversal up with a double top in the 32 area, and it's come down. And if it takes out 20, if the TBT closes, that is, can't just hit it and then bounce, closes under 27, no, 26.50. If it closes under 26.50, that yield is going to continue lower. I hope that helps you. Okay, next question came in. Okay, where was it? Okay. DE. Okay, question on DE. So this is a big issue for me because we were in PAVE, P-A-V-E. That's an ETF for the infrastructure. We got out of that, and now look at this. So you've got DEER. DEER is down 13 points at 389 right now. DEER was a fantastic winner from the July low in 283. It screams up to the 446 area with a double top at 446. Unbelievable how this happens over and over again. And now it's starting to pull back in this declining cone formation. I'm kind of worried about this. And one of the reasons is, if you look at DEER, and this is agriculture as well. If you look at Caterpillar under the 200-period moving average, made a peak D in the monthly. I've got that as a B in the only way I can count it the weekly, but it's failing so far by pulling back. I'm very concerned that even in areas, I can hear the music, even in areas where like the farming equipment that you're coming down, I think that we're in a recession. I don't know
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Got it. Okay, go live. Here we go. Okay, I'm in. Hello, we're back. Basil Chapman here, and we've just been trying to do some resolution cleaning up. And well, look at this. Here's the chart of the 1 minute chart, and look how this support level that I drawn in there. We're about to test it and about to break it. I'm going to extend it over to the right. Let me just do that. This is such an important couple of days going from yesterday into today, and the reason is that every rally has been a rally that failed and then it came back really sharply. Now today, certainly in the Dow, we've made a new low, but we haven't made a new low in the S&P or the QQQ or the IWM. So that says there's selectivity here, but at the same time, look at that that trend line resistance, the blue line, the thick blue line in the 10-minute chart has repelled the price. And now you can see the 9 in the 10-minute chart has gone under the 14. So it's pink. It says, be careful, sell. But at the same time, the 1 minute chart is trying to say, hey, I'm trying to get some support here. So this is on a very near-term basis with the Dow down 600, the S&P down 70. So now let's go back here. I want you to just show this real quickly. I had a question about, where was it here? ZNM, the 10-year. Okay, I'll get to the 10-year in a moment. So I just wanted to show you that, look, wheat has come off the bottom. Soybeans, continuous contract. has arched over. It's making that dreaded H. It's about to retest the bottom. It's down 12.5. Corn, which was doing very well in February, has gone from the 670 area down to where it is now, 625. Tried to rally. It's holding okay, but then this is the same pattern in the weekly chart, that arch formation we've got to be careful of. And soybeans, I always say that for SB. SB is sugar. Sugar has just made a peak F-top in the daily chart, but is still closer to the highs than the others were when they made their high. So that means that the DBA, which is DBA Agricultural Fund, is starting to weaken, and that's why I'm worried about Deere. I'm worried about Caterpillar. Look at those charts. This is the daily on the left, weekly, monthly on the right. This is just saying be very, very careful. So now we can go to the TNX. So the TNX is the 10-year. This is the 10-year note, trading down to at 34.32, right on the 200-period moving average. The way it looks, and this goes to Coda's question on the 2-year, it looks to me as if it wants to come back in the weekly chart and the daily. The daily is on the 200-period moving average, but the low that was made at on the continuous contract of the TNX 10-year yield, a 10-year note at 33.34, and here we are. Low today is at 33.88. I think that's going to be tested. And from the arch formation and the deflection lower in the MACD and the stochastic, I don't know. The Fed they're always late to the party. So I had said, and this is just a humble opinion on someone who doesn't do all that much on the fundies, but I do follow them, but not in great detail. But I've been saying for some time, with the economy as it is, why weren't the yields going up? If there was such a demand for IPOs, for new businesses, for building, for whatever it is, you surely should pay up for that. That's the normal thing that we've seen for decades and decades. It was an aberration that yields would be going down to give you basically what they call free money. And this is what I would call an unusual normalization. So the yields suddenly going up like they did so sharply and now coming down, it's getting back to what you would see in, now let me just show you this again. I've been talking about this maybe for 8 months, 6 months. I've been saying, if you look at the semiconductors, there's been a rotation through the whole idea of recession. And if you consider that from the 7th of January of 2022 at 318, dropping down to 161 or 2 in October, that wasn't a recession for the semiconductor industry. If you consider that Ford going from 35 in January of 2022, I talked about the Eiffel Tower, goes straight down and gets down to under 10, and now it's trading at 11 point. If that isn't a recession, I don't know what they want. We are in recessionary times, and that's the reason why I said this is just my thinking, and I don't know if it can happen. But if you look at the way the market itself, and I'll just go back to this Dow chart, everything since the October low, looking at the Dow, it's now testing this trend line. These are all signs to say we could, in fact, have seen a huge internal low, and now we're going to see a bunch of earthquakes that make residual lows, but keeping that low of 28,000 sacrosanct. I have no idea if I'm going to be right, but that's my thinking. And the reasoning for it is because I've seen rotational corrections, not just serious ones. Are you telling me that Wayfair, where did I go? Oh, I hit the wrong button. Let me just go back so I can get the Dow chart to stay the same. And I can go right here. Wayfair, is this a good example? Well, it's an example. But Wayfair goes from, look at this, trading at 30 right now. W is the symbol. And 369 was its price back in January of 2021. So there's Home Depot. Are you telling me that isn't in a recessionary phase right now? So all I can say is it depends on your definition. It depends on the rotation, the revolving aspect of like dominoes. And the dominoes that fall first, as they go along to the very last domino, the ones that fall first have been in the recession longer than the others. So we're seeing the end part of that. But does that mean it's the end part for the Fed or the end part for the, you have to recognize this. You still got to be able to say out loud, my experience with the Fed, when they finally say the recession is over, you've already seen the low in the market, and the market's way on its way to rallying. So you can't rely on the Fed for that. So those are the things that really worry me. When you're looking at something like a GE, this is very selective, had a big pullback from the 94 high of the 9th, now trading at 87. But wow, going from 46.77 back in July of last year, all the way to 94, a double. That is outstanding action, but that's selectivity. That's not happening in the general market. So you look at general market, look at General Motors. General Motors makes a high back in, was it January? I think it was January of last year at about 67, plunges down to, it's down at 33 right now. So what we're looking at right now is the conglomeration of all these different aspects that have been rotating, and maybe now you're getting it all come together. But wait a minute, why is the semiconductor, which is down 7 today at 237.89, why is it held so well? Isn't that a clue to some things? That's because there are repairs going on in the general economy, and this shows it. I'll be back in a moment.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges at which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, I'm Basil Chapman here, and we've got the final segment coming up. So let's make it as simple as possible. Looking at price movements. What will trigger a huge move to the upside? Very difficult to say. But what I am anticipating, only if, after it's 11 o'clock coming up, if the volatility index, right there, trading at 27.85, after 1:30, if it is below 26, and the Dow has come back from the minus 500, 600 area and is only minus 375, and then at 2:30 to 3 o'clock, it is minus about 175, that'll allow for a relief rally, and just treat it as a relief rally. If the VIX index starts to climb into the 28.10 area and then goes higher, that 30.81 level becomes a target. So you got to be really careful here. Excuse me. If after 1:30 to 2 o'clock, that period, the Dow is holding steady in the minus 475 to minus 575 area or worse, you could get a 2-in-1 day. I mean, this is one of those days. You could get everyone saying, I'm done. I am done. I'm out of this market. I'm done. And you could get selling a double of the noontime price into the close on the downside. My thinking right now is that we had the opportunity to rally. It was very mild, and we pulled back. And all I can say is if you were looking at, say, the E-mini, let's go to this chart right here as we're about to wrap up. You're going to hand it over to Steve Rhodes. I believe, I'm not sure if Steve's here, if Steve can do it. But whatever it is, we've got great programming all day today. All those hosts that you have coming up, they're going to be giving you good clues. But I would just say that you have to get above that 39.06 level by 1:30 to 2 o'clock to really see a rally into the close. But if it's holding very poor right now, that's going to